Hello and welcome to our commentary of the third issue of S&P Capital IQ EMEA Private Equity Market Snapshot. This report is produced on a quarterly basis and provides a broad overview of the EMEA private equity market, highlighting some of the most notable trends. In each edition, we provide in-depth analysis of the market and identify emerging trends. Each of our reports includes an appendix with a comprehensive data pack, providing a top-down view of the market compared to its position in the same point last year. Issue 1 look at the general trends in the EMEA private equity market in 2013. In our second report, we drill down into Sub-Saharan Africa's outstanding growth and also analyze trends emerging in the healthcare sector. In our current report, we look at two notable trends: the increased interest by Asian private equity firms into Europe, and secondly, we explore recent 2014 activity in Spain and France, and in particular Spanish growth, both in terms of numbers of deals and transaction volume. France, on the opposite side of the spectrum, has seen a significant decline comparing first half of 2014 to the same period in 2013. Today, I'm joined by two of our authors, Paul Bishop and Ian Hathard, where we will be discussing the second trend around Spain and France in further detail. As a starting point, Paul, looking at the data pulled from the S&P Capital IQ platform, can you tell us what's the overall picture for the first half of 2014 and how have private equity firms in EMEA fared?
Unfortunately, Q2 has not been fantastic, and we've seen investments by EMEA private equity firms slow compared to the second quarter last year. In Q2 2014, we've seen 1,157 new investments, deploying 19.8 billion euros. That's a 10% decrease in deal counts, and a 31% decrease in capital deployed. This trend extends into more recent data, with July and August figures exhibiting the same deceleration. If we view the entire January to August period, we can see that EMEA-based firms made 2,793 new investments, putting 58.6 billion euros to work. That's a 7% decrease on new deals over the same period in 2013, and a 6% decrease on the 62.2 billion euros invested. The lacklustre performance continues on the exit front, with deal volumes down by 80% to 15.2 billion euros, and deal count down 5% compared to the January-August period in 2013. Taking a look at the overall picture, I think it's fair to say that the second quarter this year has been something of a disappointment for EMEA private equity. As it stands, we also seem to be looking at a weak third quarter performance as well. It would seem that we are seeing the results of a much more competitive marketplace for private equity investors, as strategic capital has really come back into force over late 2013 and early this year.
That's an interesting angle, Paul. Two of the biggest trends we have seen coming out of the report in the second quarter concern Spain and France. Both countries seem to have moved in opposite directions. Starting with the winners, can you provide some background first at what has driven uptick in Spanish investment in 2014?
I think we've seen the level of investment in Spain that a lot of people were predicting at the start of the year. There was a significant amount of interest in Southern Europe expressed by PE investors, especially in Spain. Whilst private equity managers avoided the region in the debt crisis, they have clearly come back in force to mop up Spanish assets as they are divested by deleveraging European banks and corporates. For example, the biggest deal involving a private equity investor in a Spanish asset this year was the 3.5 billion euro acquisition of a portfolio of Iberian commercial property loans from Commerzbank, acquired by Lone Star and JP Morgan. A lot of the painful restructuring and deleveraging in the country has happened, and I think private equity investors are banking on a strong economic recovery in tandem with a good supply of cheaper targets. Spain's economy grew for 2 consecutive quarters in early 2014, beating the forecast in Q1, and this seems to support the idea that Spain is slowly recovering.
That's interesting. Ian, shifting the gaze to France. On the other hand, we have seen significant declines in investment. Volume is down by 30% comparing to the first 8 months of 2013. What has turned the industry off out of this normally core EMEA market?
The economic gloom that has surrounded France this year is really contributing to the drop-off in private equity investment. This is underscored by large declines in traditionally strong French industries for private equity. For example, consumer discretionary and industrial sector deal volumes is down by 23% and 82% respectively. This is when we look at January to August 2014 compared to the same period last year. These two are really core industries for France in terms of PE investments, together accounting for over 50% of all capital invested since 2000. Within these industry sectors, we can see even more stark swings in investment. French apparel, accessories and luxury goods deals down to only 373 million so far this year from 3.5 billion in 2013. More broadly, investment in French assets for growth strategies, excluding VC investments, fell by 50% on 2013's figures. The private equity industry seems to have very poor views towards the growth potential that target companies in France display. Industry consensus from our regular conversations with practitioners suggests that this is largely due to structural problems that France has failed to address. This would include restrictive labor market policies, high labor cost, and a PE-unfriendly tax policy implemented by the Hollande administration. This year, we've seen France miss its projected GDP growth forecast in Q2 2014 by a significant margin, and economic malaise in France has really reared its head. PE managers we spoke with at the start of the year were already expressing their reservations about France, and it now seems that most of them have decided to put their money where their mouth is, or rather not in this case.
Indeed. Thank you both, Paul and Ian. I hope our brief analysis has provided you with some good insights into what you can expect from the report. If you are interested in receiving the current or former editions of the EMEA Private Equity Market Snapshot, or if you would like to get in touch with myself or any of the authors, simply email or call us using the contact details shown on the screen now. And lastly, we would appreciate if you could share with us your thoughts on our reports and any ideas or areas you would like us to focus in our upcoming editions. Thank you very much from S&P Capital IQ.